Shweta Daptardar, the Vice President, Lead Analyst of Diversified Financials Sector from Elara Capital, also joins us on the show. Shweta, hi, good to be speaking with you. What's your own prognosis of this 54 EC being allowed or extended as per the budget as well? And does it really move the needle for companies like HUDCO as well as IREDA, etc.?
Hi, good afternoon. So this is big positive for both IREDA and HUDCO per se. So 54 EC bonds, which are priced somewhere as low as anywhere between 5% to 5.5%, definitely bring cost of fund benefits, like we mentioned earlier. And if you look at HUDCO per se, almost 60% of their borrowings today are raised through corporate bonds, tax-free bonds, and now these capital tax-free bonds. So which will bring significant benefits on the NIM accretion. So cost of funds today, any which ways, are 30 to 40 bits lower than blended cost for these corporate bonds for HUDCO. So further inclusion of 54 EC bonds, which incrementally we believe will be 10 to 15% of their overall liabilities, would benefit them on long-term basis on the NIM accretion perspective. So we definitely are positive on HUDCO per se. The valuations, although have caught up significantly, given that there has been a PSU-led rally, in fact even the national election-led rally. But we strongly believe that fundamentals are yet to play out for HUDCO, and the biggest testimony has been the Q4 earnings, wherein HUDCO has already clocked 14%, 15% annual growth targets. They are sitting on almost as high as 820 billion odd sanctions pipeline. So the going is good in terms of both business growth trajectory as well as ROE trajectory. So yes, we maintain bullish stance, and this news further reinforces our confidence.
Shweta, in fact, so one is of course cost of capital going down and IM accretion. The other point is size the opportunity. Recently, both IREDA and HUDCO have been interacting with us. HUDCO now is talking about rolling out massive housing projects on behalf of state governments. Almost a dozen state governments, I mean, they say, are interacting with them. Same goes with your IREDA talks about 30% kind of AUM addition for next 3, 4, 5 years. How long or can you see the tailwind of their business models?
So yes, you're right. Basically, primarily both power financiers as well as HUDCO, which is say a housing and urban infra financier, these are largely benefiting from the cyclical tailwinds. So both on the power side, with government focus on green energy transition, the renewable targets to the tune of almost 500 gigawatt capacity installation, which per se will translate into significant funding opportunity for power financiers. And on the other hand, for HUDCO, as you rightly pointed out, this government has significant focus on PMAY housing schemes. And for HUDCO, 50% of their portfolio is largely housing. And another 50% or the remainder 50% is infra. And again, we are in the beginning of upcycle on the infra side. So at least for next 4 to 5 years, the growth looks pretty decent and healthy for both power financiers and players and NBFCs like HUDCO.
Right. All right, Shweta, we'll let you go on that one. Thanks so much for joining us. That was Shweta Daptardar speaking about HUDCO and IREDA, where some policy tweak is likely to improve their cost of financing. Big deal.
If you like this video, then like, share and subscribe to ET Now.